Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, December 24th, 2019, Christmas Eve, and we are now in the final hour of the trading day. As I mention each day, in my opinion, the most valid prices to make your buying and selling decisions from are the prices as close as you can get them to the close of the market of that day. I prefer to make the majority of my buying and selling decisions just with the few minutes left in the day. During the day, you have the algorithms, you have the day traders fighting it out. I just consider those prices a lot of noise. At the end of the day, the large financial institutions, the market makers come in and move the prices to what, in my opinion, are the most valid prices. So anyway, happy Christmas Eve to everyone. We're having it's a short day today. The market closes early, so that's why we're starting here at 10 p.m. Mountain Standard Time. So anyway, thank you for coming today. I appreciate you getting up early to watch this live stream today. So hey, Steve Burns is here. How you doing, buddy? Good to see you, my friend. Merry Christmas to you and Holly and the dogs. And Steve says, I love these early bird special shows. That's right, the early bird special show. Thanks for coming, Steve. Always an honor to have you here, my friend. Thank you for everything that you do, all your great content, all your great books, the education that you provide for people. And, really thankful for Steve. He's been a mentor and teacher of mine for years, and has taught me a lot. So thank you so much, Steve, for coming by today. Marco, hey buddy, good to see you, my friend. Marco's from Slovenia, so hope you're having a good evening. And Marco says, hi Greg, Steve, and all, happy holidays. Happy holidays to you too as well, Marco. Hi William, how you doing, buddy? Boy, that's early in Hawaii today, right? William's in Hawaii, so good to see you, my friend. Hope Cooper is doing well, and happy holidays, Merry Christmas. William, yes, happy holidays to you too. Kurt, good to see you. Kurt says, hi, Greg and Steve. Merry Christmas, all. Merry Christmas to you, Kurt. Hope you're having a good day today. Hope you have a nice holiday and have a good Christmas tomorrow. And take it easy a little bit. I know you work hard. Frank, good to see you, sir. Frank says, Merry Christmas to Greg and all. Thank you, Frank, and thanks for that great little quote that you let me use the other day. I put that up on Twitter. I thought that was fantastic. When it comes to trading, my opinion is none of my business. So Frank's a good writer. I can tell. So JT is also here. Hey, buddy. Good to see you, my friend. Thank you so much for coming. Happy holidays. Merry Christmas. Hope you have a good Christmas Eve tonight. Good Christmas tomorrow. You know, when I was growing up, my mom is Swiss. So I'm half Swiss. And in Switzerland, they celebrate Christmas. Well, they open presents on Christmas Eve, not Christmas Day. So growing up, Christmas Eve was always the day. Man, it was like the longest day of the year. I couldn't wait till the evening would come, and she'd light the trees. We'd have like a real tree, and she'd put candles on them because that's how they do it in Switzerland. Then I'd open my presents on Christmas Eve. So this was the big day. So anyway, all right. Well, we're having a pretty good day thanks to metals, and we'll go over that in a second. But just real quick, the schedule for today, I guess it is my policy. First of all, we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. Always super important. It's very important to learn technicals, entries, exits, support levels, resistance levels, for sure. But after you've learned all that, then you have to prepare a plan for your trading. It's essential that you have a plan. But then the tough part comes into following the plan, and that comes down to trader psychology. It's a skill, everybody. Try to put it in the context of it's a skill. So if you're trading, if you had a pretty good plan, right, but you're not following the plan, then that's what you need to work on. It's like a basketball player that can dribble great with his right hand, but not with his left. That guy or that girl needs to work on dribbling with their left hand, right? And so if you're having a problem, if you're good at technicals, good at setups, all this kind of stuff, but you're not following your plan, that's what you need to work on. And I promise you, if you work on that, it's going to improve your trading. And it's a must. It's a necessity in trading to have a plan and be able to follow the plan. It's no good to have a plan and to just willy-nilly shoot from the hip, in, out, blah, 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 right? You have to follow a plan. So we're going to talk a little bit about trader psychology, maybe some insights to that. And hopefully by me hitting you over the head every day with this, it's going to seep in, you're going to internalize it, and you're going to start following your plan. After that, we're going to go through my watch list, each stock one by one, and we are going to take a look at support and resistance and indicators such as MACD, RSI, moving averages, ATR channels. And the way that I view trading is I look at all these indicators, not as indicators, but as potential groups of buyers. And if you want a stock to go up, you need to be in the company of as many groups of buyers as possible. Okay, so if that's the case, then if one indicator equals one possible groups of buyers and another indicator equals another possible group of buyers, you want to see a confluence or a combination of those indicators lining up. Or another way to say that is you need a confluence of different groups of buyers coming in, because the more buyers, the better chance you have, right? So first thing I'm going to look for is a confluence of indicators or a confluence of buyers. Second thing I'm going to look for is, does it provide me with a good risk to reward ratio? If I'm risking $100, does it allow me to make $200 or more to the upside? That's very important. Sometimes you have good setups, you have a good confluence of signals or a good confluence of groups of buyers, but it doesn't offer you a good risk to reward ratio. So you can't just have one. So, and then the third, we're going to make sure that if I do find a good setup that has combination of buyers, combination of confluence of signals, and a good risk to reward ratio, I have to make sure that I don't already have a couple positions in that same industry already with live trades. If I do, then maybe I can't take that one, or maybe I have to get rid of the one to add this new one. So 3 requirements in trading: look for a confluence or a combination of signals or buyers. 2, make sure you have a good risk to reward ratio. 3, make sure that you are not too heavily correlated and you have some diversification in the positions that you have. So that's what I'm going to look for. I'm going to go down through the list. In the essence of time, I'm going to go down fairly quickly on the ones that don't have any setups. I'll spend some time definitely if something looks good. But if I find something at the end of the day, then I'll go ahead and purchase it right before the market closes. After that, after the market closes, if anybody has any questions, please let me know. If you have any stock symbols that you would like me to take a look at, please let me know. I'm happy to do that. Happy to break down the chart and give you my opinion. If there's any signals that you think look good or might be interesting or helpful for the group that you would like me to go through before the market closes, please, put a star by it or something, asterisk, so I know that it's time sensitive. And I'll do my best to get to those before the end of the market. So, all right, well, that is the plan, and that's the schedule for today. So hang tight. I'm going to run this U.S. legal list real quick, and I will be back in about 40 seconds. Thanks.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okie doke. Frank says, a poem. When you take a position, make sure that it agrees with your disposition, because it just ain't right if you can't sleep at night. Boy, is that true. A lot of truth in that, Frank. And pretty simple. If you can't sleep at night, because you're worrying about the positions. You have too large of positions on. It's a pretty simple rule, pretty well-known fact. It's a good acid test. If you can't sleep at night and you're worried about your positions, you have too many positions or you have too large a position. So pare those positions down, get a little smaller, and that'll help you sleep. That's great. Thanks, Frank. Alan says, hey, everyone. Good to see you, Alan. I hope you have a good Christmas Eve, happy holidays, all that stuff, and thank you so much for coming. New trader, Steve says, I just tweeted your quote, Frank. Oh, there you go. Nice. All right. Well, let's get to it, I suppose, huh? All right. So, Amazon, let me just make sure the microphone's on. Okay, good. So, been in Amazon for a little while here. I did buy Amazon back here on the 17th of December when we had a close back over the 250-day moving average. This is a good back-tested approach. Does not win very often, but the wins you have can be very large, and the losses that you have will keep your losses small if you adhere to closing under the 250 day. There's nothing special about closing over the 250, but it does give you a good landmark or line in the sand to keep your losses small and give you the potential of a nice big win. So we bought it back on the 17th at 179, 1791.06. We're at 1790.85, so pretty close to break even. Did take some profit up here one day. But if it closes under the 250-day moving average, which is 1785.71, I'll go ahead and just lock in a small loss. If it keeps going up, I will continue to phase out. I'll have, important resistance level above us on Amazon is the 200-day. If it reacts negatively, tags the 200-day, closes back below, I would go ahead and take profits there. My ultimate profit target is up here at the 70 RSI. So if we got up here and failed, I would get out. If we got up to the 200, closed below, I would get out and lock in profits. If we closed above the 200, I would keep it, then use the 200-day as my new trailing stop. So anyway, pretty close to a break-even trade here at the moment. But again, my initial stop here is a close below the 250 to the downside. To the upside, I'll continue to phase out and see how we react around the 200-day. GE, okay, GE is a new position. I took it yesterday. We had this really nice V2. Here's day 1, day 2, day 3, day 2. Washes out day 1, day 3, the day we bought, closed above day 1's close. This is called the V2. In addition to that, we also closed above the 20, the 5, the 10 in one fell swoop, which was good, above the 50 RSI. Currently, we are up 1 penny on the position. We were up higher, no profit targets yet today. My initial stop here is a close below the day 2 washout bar. Orange line up here shows that I have moved minimum more than 1 ATR away from my entry. If we got up to here, I would start implementing some kind of trailing stop like a close below the previous day's low. So until we get here, no trailing stops, and I will use a close below the halfway of the washout bar on a closing basis as my initial stop. But we're slightly up on that. All right, gold. Well, gold's been a great trade for us. I did buy gold back here on the 13th of December when we had a 5 EMA crossing over the 20 EMA. So this is a good back-tested system. Again, it doesn't have a high winning percentage, but it does allow you to have big wins if you're right, and most likely small losses if you're wrong. And that's the key to profitable trading, right? Having large wins is good. Having small wins is good. Having break-even trades is okay, is good. And having small losses is fine as well. You just can't let these positions turn into big losses. And so that's the good thing about the 520 cross. If you're right, it allows you for big moves to the upside if you're patient. If you're wrong, it's going to stop you out quickly. We did hit 3 profit targets today, so this has been a monster trade so far. I do want to point out, I talk about small bars leading to big bars. Well, here you go. Here's the small consolidation bars, and then boom, boom. So anyway, I will continue to stay in this trade. My profit target up here is 142.24, so not too far away. 70 RSI. So, if we reject the 70 RSI, I will go ahead and lock in profits. If we close above the 70 RSI and go parabolic, I would continue to hold it. My stop now, this is a crossover trade, so no trailing stop. I will stay in this. I will stay in this until we either reject the 70 RSI or we close back below the 2 moving average that I used as the cross, the 5 and the 20. So anyway, 3 profit targets today. Very happy with that. And yeah, the metals are doing well today. All right. Next position, silver. I did buy silver back here on the 19th of December. Same approach, 5 EMA crossing over the 20 EMA. Again, this is another good long-term back-tested approach for silver. Doesn't have a high winning percentage, but the wins are big and the losses are small. So bought this back here at 1594. It's moved up ever since today. Have hit 3 profit targets, and I actually added a 4th profit target up here. It's possible that we could hit a 4th profit target. So my target up here is the 70 RSI. If it rejects the 70 RSI, I'll go ahead and get out. My stop is a close below both the 5 and the 20, which is way down here. So hopefully we can tag that 70 RSI up there before we come on back down, but we'll see. But this has been a great trade so far. From entry to current price, almost 3.8% in 3 days. So pretty good. Pretty good. Or as Larry David would say, pretty good. All right. So that's silver. SPY, our very famous overnight SPY trade. World famous. So, in case we have some new viewers today, I'm going to go over this. I know you guys get tired of hearing this, but like I said, in case we have some new viewers, I want them to understand why I take this trade every day. This is an everyday trade, but this is from Liz Ann Saunders at Bespoke Invest on Twitter. This is a back test from 1993. 2 options they tested with this back test. The first option was buying the SPY at the open each day and then selling at the close every day. So buy the open, sell the close, buy the open, sell the close. If you did this every day since 1993, for all your troubles, you've been rewarded with a negative 13.9% return. However, if you do the opposite, which is what I do, I buy the SPY at the close each day, sell it first thing the next morning. So buy the close, sell the next morning, buy the close, sell the next morning. Using this approach, every day from 1993 would have returned a 634.2% return. So you can see the difference. Buying at the open, selling at the close, a negative 13.9. Buying at the close, selling the next day, a 634.2% return. Past performance is no guarantee of future results. That is, of course, true, and that goes for any trading approach. But if you're going to allocate capital, I would rather allocate capital to something that has worked well over a long term, right? And you can see the blue line's the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. Huge difference. I love this chart because it shows you what your equity curve can look like if you have an edge and you're able to use this edge over a long period of time, how it can grow and grow and grow, right? It has ups and downs. Here was a couple years of down. Here was a year and a half of down. So it does happen. During the month of May, I think I lost 80% of my trades, overnight trades. But for the year, it's been fantastic. It's been close to 22% of my entire yearly profits just using this approach. So with that being said, did buy it yesterday at 321.22 and sold it today at 321.43. So another nice winner here. Made an all-time high in my equity with this approach. So it's been fantastic. It's been really great. So yeah, bought at 322.21, sold at 321.43. So a nice quick overnight, what is that? 21 cents per share trade overnight. So and now we're lower than the open. Do want to point out, last couple days the S&P has closed below the open. Now we're below the open. That's generally not a great sign. As a matter of fact, I studied with Larry Williams long time ago when I first started trading, and he actually has an indicator that measures how often we close below the open, and not all the time obviously, but it is a bit of a harbinger or a kind of an omen. If you have a lot of below, close below the opens, generally there's a good chance you have a little bit of a down move coming. Not every time, of course, but I did notice that we've had 2 days where we've closed below the open. So I will be buying the SPY again today at the close and selling it first thing tomorrow morning. All right, last trade. So I did buy the VIX, which is volatility. I did buy it back here on the 20th of December. We went under 30, over 30, under the third channel, negative third ATR channel, over the third ATR channel. Also had a V1. Here's day one, day two washed out day one, closed above. It's kind of moved sideways since I bought it, down a little bit today. I bought it at 1501. We're at 1491, so slightly negative on the trade, but we are back inside over the third ATR channel, or the third Keltner channel. My stop is going to be a close below the 30 RSI in the coming days. So if we close below 1460, I will go ahead and just get out of this trade. If not, I will phase to the upside. 50 RSI up here is my initial target. So we'll see how that works out. But all in all, a really good day today. I did hit a yearly high again today, which has been great. It's been like 3 or 4 or 5 days in a row, I think, of yearly highs. So I don't know if anyone was trading last year this time. And if you were, I'm sure you remembered it, because a year ago on Thanksgiving, a year ago on Christmas Eve, in the shortened, we had a shortened day like today, we were down, I think, over 700 points. Do you remember that, Steve? That was brutal. And that was on top of December being horribly brutal just by itself. And then it just, climax day on Thanksgiving or Christmas Eve of down over 700 points. That was brutal, man. I'll tell you what, that was brutal. So anyway, all in all, good day today. Nice positive day today. Very thankful for that. Okay, so Dr. Jorgensen, hey buddy, good to see you. Merry Christmas Eve. Dr. Jorgensen says, they say diamonds are a girl's best friend. Gold is Greg's best friend. Yeah, gold's doing pretty well today. Both the metals are just kicking butt today for sure. Hey, Man Solo, what's going on, buddy? Man Solo and I had a nice Skype call last night. Got to know each other a little bit, and always fun. I always like to have Skype calls with the people in the group. It's nice to put a face to the name and all that stuff. And it sounds like we're going to be working together. Man Solo and I are going to be doing some private lessons. So look forward to that, bud. Clarence Beeks, what's up, Jesse? Good to see you, my friend. Hey, Greg and gang. Merry Christmas all. Merry Christmas to you, Jesse. Great for you to be here. And Jesse's one of my previous students and really great student, really great guy. And so yes, Merry Christmas to you and your family, and hope that you have a great New Year as well. Dr. Jorgensen says silver is close behind. That's right, Dr. Long. Hey, Dr. Long, good to see you. Thanks for coming. Mount Doji, let's go GE. That's right. Let's go. It's up today, so that's good. But thanks, Dr. Long and Mount Doji, for coming, and Merry Christmas. Dr. Jorgensen, made money sleeping again. So easy, right? Remember now, yeah, we've done very well with the overnight SPY trade. But listen, we're going to go through a drawdown. It's a for sure, right? But maybe it'll keep going for a month or two. Who knows? Dr. Long says, sold 20% of my gold calls, so I own 80% at least for less than free. Fantastic. So he locked in a little bit and he's kind of free rolling on the rest. Nice trade, Dr. Long. Mansell says, for SPY, looks like 70 RSI is acting as support. Yeah. When we get over the 70 RSI, then it should act as some type of support. When we're under it, it acts like resistance. That is correct. Frank says, the chart looked like broken glass last December. Oh, it was horrible. It was horrible. Steve says, yeah, last year, the market was plunging into a short-term bottom. This year, it's on its way to the moon. Yeah, how it can change year to year, right? Shane, what's going on? First time watching. Great to have you, Shane. Thank you so much for coming. Appreciate it. If you have any questions for me, please let me know, and hope you learned something, and I hope you come back. But Merry Christmas to you, Shane. And Man Solo says, looking forward to it, Greg. Me too. Me as well. Okay, so listen, this is the time of the day where I do like to talk about trader psychology. There's some really great Twitter channels out there that spend a lot of time and effort to post good trading sayings, good trading words of wisdom, and I really appreciate them doing it. One of my favorite is Stephen Goldstein. Stephen Goldstein is a retired professional trader. He's a trading coach, performance coach. Really great guy. He has a great podcast, the Alpha Mind podcast, that you can tune into. He actually interviewed me on podcast, but you can find him at Alpha Mind 101 on Twitter. But Steve always has great posts, and he says here, a huge mistake many traders make is to misunderstand what the job is. They think it is about analysis when it's actually about monetizing analysis by managing risk. Thus, most effort goes into learning analysis, but virtually none goes to improving, taking, or managing risk. And, it's so true, everyone. I mean, our job as a trader, our first and foremost priority is to manage risk. We're not trading stock, we're managing risk. And, this is spot on when he says most effort goes into learning analysis, but virtually none goes into improving, taking, managing risk. That's true. That's what I was talking about earlier. Following your plan, everyone concentrates on the analysis, the setups, the charts, the support, the resistance. It's important, but what's important is to manage your trade, follow your trade plan, which is essentially, in other words, managing your risk, right? Keeping those losses small, letting those winners run. So, here's a little guy on the rope up here. It's a delicate balance, right? It's a delicate balance. But real quick, again, a huge mistake many traders is to misunderstand what the job is. So misunderstanding what a trader's job is. They think it's about analysis when it's actually about monetizing analysis by taking and managing risk. Thus, most effort goes into learning analysis, but virtually none goes to improving, taking, managing risk. So, always think about your risk first. Always, always. If you have two options, one is a little risk and one is a lot of risk, take the one that has the little risk. Because at the end of the day, if you manage risk, if you're aware of risk, if you obsess about limiting risk, that's how you're going to make money, right? So thank you, Stephen. Appreciate it. And Merry Christmas, Happy Holidays, all that stuff. To you and your family over there in the UK. And again, it's Stephen Goldstein at Alpha Mind 101, and he has some great podcasts. He interviews all different types of traders from all over the world, so I think you'll find it helpful. But thanks, Steve, and Merry Christmas. Hey, John, good to see you. John says, anybody watching Argentina? ARGT BMA. Merry Christmas, everyone, and thank you, Greg, for all the information. You are certainly welcome, John, and Merry Christmas to you. And I'll take a look at some of those a little later. Man Solo says, bought love yesterday at the close. Well, if you're going to buy anything, love sounds like the way to do it. All right. So let's watch. Let's put him on solo down for love over here. LOVE. Boom. So Mon Solo is on the board with love, and he's up. Holy smokes, he's up 2.7%, no less. Fantastic. Anthony, what's going on, my friend? Good to see you. Anthony's a previous student of mine, a great student, by the way. Anthony says, Merry Christmas, Greg. Have a great Christmas. You really helped me having the best quarter, especially when you consider stress to profit. Little stress, good profit. Oh, I'm really glad to hear that, Anthony. So glad to hear that. And Merry Christmas to you and your family, and hope you have a great New Year, great 2020. And anyway, appreciate you being here today, bud. Shane says, same to you. Watch many of your videos. Oh, thank you, Shane. Thank you. That's great. Like I said, if you have any questions, let me know. Man Solo says, this quote is gold. Hits close to home, too. Which quote? Was that Frank's quote? Oh, maybe the one I just did from Stephen Goldstein. Steve says, Merry Christmas, everyone. You too, my friend. All right, well, I guess we should get to it, huh? Go through, see if we have anything happening for today. All right, so Apple, just too high, way too high, above the 30 ATR channel, above the 70 RSI. Need a pull back into the value zone at the very minimum. Adobe, too high, need to pull back right into here between the 1 and the -1 ATR channels, which I call the value zone. So just too high there. Amazon, so it's possible we could get stopped out of this today. I don't know. We'll see, but we'll have to watch that at the end of the day, right? With the close under the 250. Boeing had a big day yesterday, giving some of it back today. For me to get interested in Boeing, I'd like to see it reject the 30 RSI by a deep dip down here, 30 RSI. Berkshire Hathaway, we were above the 1 ATR channel. Now we're getting close to coming into the value zone. So I consider anything above the 1 ATR line overvalued. I want to buy something at value or undervalue. I don't want to buy something overvalued. So Berkshire Hathaway, if it could move its way back down into the value zone, have some consolidation or sideways movement, that's where I would be interested. Beyond Meat, so nothing here for me today. We have traded this twice. We've had some nice trades. We bought here under 30, over 30 intraday. We scaled out here for profit. I got out here. I didn't like what it was doing. I think it was here. Then it moved down, went right back up. We re-entered here on this V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3. Our entry closed above. It moved up nicely. Boom, 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 boom. Hit some profit targets. I didn't like the price action of this day, so I did get out. And it's just kind of been moving sideways. Is up a bit today, so that's good. So really nothing here for me on Beyond Meat at the moment. Caterpillar above the 1 ATR channel, like to see it come dipping back down into the value zone. That's what I'd be looking for. Dow Jones thoroughly rejected the 3rd ATR channel here, didn't it? And remember, 90% of prices fail at the 3rd ATR channel. 90% of prices hold at the negative 3rd ATR channel. So not a great sign here for the Dow. But who knows? This has been a crazy market, so it could continue back up, but I'm looking for a dip into the value zone. Walt Disney, nothing yet on Walt Disney. What I would be looking for on Walt Disney here, we had this big day up when we had the Disney Plus come out. This is a big bar, huge bar. It should hold some support on the way back down at the 50% Fibonacci number here. So if you extrapolate that price over to here, current day, that 50% fib of that large bar lines up nicely with the negative 3rd ATR channel. Remember, 90% of prices bounce or stay above the 3rd ATR channel. So I would be looking for some kind of entry, a V1, V2, something here at about 142.10, somewhere in this range. So nothing quite yet on Disney. Etsy, it's been moving up nicely, slightly down a little bit today. We're above the 1 ATR channel. I need to pull back into the value zone, sideways movement, V1, V2. Facebook, above the 1 ATR channel. Again, need to pull back into the value zone before I could get interested. Gold, of course, doing very well for us today. Look at this. Whew, 3 profit targets. It's hard to get 3 profit targets, everyone. I'll tell you what. I think I've got 4 or 5 before. But anyway, going to continue with this trade. 70 RSI is my profit target. This is a crossover trade, so I'm not implementing a trailing stop. So either it's going to hit my profit target or we're going to close back below both the 5 and the 20. Google, above the 1 ATR channel, poking its head into the value zone, which is good. So now it's coming back into value, but needs some further, I need a little further down here, sideways movement, V1, V2. Goldman Sachs topped out right about the 70 RSI and 3rd ATR channel, like many stocks do. Pull back into the value zones, what I'm looking for. Home Depot had a nice bounce here, close to the 200-day. It's above the 1 ATR channel. Need to come back into the value zone. IBB, super strong. Really strong. But I'll tell you what, I can see a lot of bearish things going on here. We have a high, we have a little pullback, now we've made a higher high, we have no green whatsoever. Look here, at this previous high, we're at the 3rd, 4th, we're at the 5th ATR channel. And look how high the RSI was. Now we are higher than back there, and we're only at the 2nd ATR channel. And look how low the RSI is. See how we're higher in the price, but look at the RSI. It's way down here. So we have an RSI divergence. We have a MACD divergence, negative MACD divergence. We have an ATR divergence. Lots of divergences here. If Dr. Alexander Elder was watching this, he'd be licking his lips. Intel, so Kurt, doing really well with the puts you sold. I think you're looking pretty good there as long as it doesn't close below $52 on the 10th of January. But I would imagine you've got at least 80% of your premium, I would imagine. And in that case, if I get 80% of my premium when selling a put, I just go ahead and lock it in because now your risk to reward's diminishing quite a bit. Russell, just too high, need to pull back. Johnson & Johnson, too high, need to pull back. CarMax, we were watching that. It really took a dive after earnings. It's 27.27 RSI. You know, if we could close back over the 30, I would consider it. I'd also consider some kind of bounce down here at the 200. I think that'd be a pretty sweet spot. Coca-Cola, above the 1 ATR channel, need to move back in. Lockheed Martin, we had this sideways movement, false break to the downside and reverse back up, but nothing there on Lockheed Martin for me. MasterCard, need to pull back into the value zone. McDonald's, need some sideways movement at the very least in a V1, V2. Merck, too high, need to pull back into value. Microsoft, too high. You can see it kind of got stuck there at the 3rd ATR channel, so I'll pull back into value is what I need there. Netflix, really, really high, still above the 3rd ATR channel. You know what I'm going to say? Pull back into value is what I need. Nike, pull back into value. Philip Morris, up a little bit today, nothing today. I need to pull back into value. We had a great trade on this last time. I don't want to buy up here or above the 1 ATR channel. Then we pulled back into value. That's requirement 1. Requirement 2 is we need some sideways movement. Well, we certainly got it here. And then after that, we need a trigger. And here was our V1. So look at this beautiful trade, right? Don't want to buy up here. Wait for it to pull back into value. Sideways movement, V1. And that was a great trade. We got out here on this day right here. But nothing now, but again, rinse and repeat. We're above value zone. I want to wait for a pullback into value, sideways movement. Then I'll consider getting in again. PayPal holding the 200-day, which is good, but it's too high. It's above the 1 ATR channel. I don't like to buy anything above the 1 ATR channel. The Qs, way too high. I do want to point out, you know, I talk about the 3rd ATR channel as being difficult to get above. although sometimes it happens. Let me show you the weekly. It is so difficult for prices, especially on the weekly. It's hard to get them. It's hard to go above on the daily, but on the weekly, it's extremely hard, especially for an index. Look here, third ATR channel. That's where it bounced. Negative third ATR channel. To the upside, third ATR channel. That was it, right? And look where we are right now, guys. Third ATR channel on the weekly. Kerry Lavorne, taught me whenever you see indexes at the third ATR channel on the weekly time frame, you are very likely near a top. And we can go through all sorts of charts, and I could show you this, and we'll look at the SPY, but just quickly here, right? Third ATR channel on the weekly, that was the bottom. Negative third ATR channel. Third ATR channel on to the upside, that was the top. And here we are back again. So something to be aware of. Doesn't mean it can't go higher, but statistically, I think it's getting pretty close. Silver, of course, we had the 520 crossover. It's been a great move up. Hit 3 profit targets today. Like to hit that 4th one. That'd be pretty sweet, huh? We got kind of close, but not yet. The SPY, here we are, third ATR channel. Let's look at the weekly on the SPY. Caught support on the weekly at the negative third, resistance at the positive third. Didn't quite make it there, and here we are back again at the third ATR channel on the weekly. So something to be aware of, right? Something to be aware of, that statistically this is where it runs out of gas on the weekly. And on the daily, same thing. We're at the third ATR channel as well. So bonds, kind of consolidating here, moving sidewards. This is looking pretty good. What I'd like to see after this sidewards movement, I'd like to see one spike down, reversal back up. That would be an entry. Or some kind of, if we could get down here to the 200, that would also give me a good risk to reward ratio. Tesla, it's just the monster. It's just the monster. I mean, here we are above the 6th ATR channel. Does not happen very often. It's very rare. Dr. Alexander Elder has a trading approach called fading in extreme. And what does extreme mean? Well, once you get up to the 6th ATR channel, he considers that an extreme. And it is extremely overbought here. It was extremely overbought all the way up here. If you would have shorted it, you would have just got slammed every single day. So I don't want to mess with this. I would rather wait for a pullback into value and buy that dip. Twitter up a little bit today. Looks like it's slowing up here at the third ATR channel. Need to pull back into value. United Healthcare, same thing. Need to pull back into value. Oil up today. Can't get involved in here, need to pull back into value. VIX, of course, we have this. We bought that a couple days ago. We are slightly down on the trade. We're down about 6-7 cents. 30 RSI is my stop on this. I entered with the V1 under 30, over 30, under the third ATR channel, over the third ATR channel, and a false breakout to the downside. Here was the previous range. We poked our head lower and went above. So all in all, I don't know if this is going to be a positive trade or not, but it is a good signal. I can tell you that. It was a good setup, but not all good setups work. Verizon made a new high here, coming back into value. Remember, don't want to buy above value, want to buy in value. Well, we're in the value zone now. Does that mean immediately buy? No, that's just step one. Step two, we need some sidewards movement. Step three, we need an entry trigger. So nothing yet there. Walmart, same thing. We were above value. Now we're into value. 2 days ago, we came into value, continuing to go down. Today, we have some sideways movement, but after it makes its last move to the downside, then I like to see 2 days of sidewards movement to see if it can hold. Then 1 day of an attempt to break to the downside and reversal. So in the coming days on Walmart, if we could just get another day of sidewards movement, at the minimum. I'd like to have 4 or 5 or 6 like we did on Philip Morris, and then a V1. So nothing yet on Walmart, but potential here to buy this dip if we can get some sideways movement in a V1, V2 entry. Energy, it looks like it tagged the third ATR channel, need to pull back into value. Financials, we were way up here. Nice kind of orderly move down. Needed to come back down a little bit into the value zone and look for that dip buy. Real estate bounced nicely off the 200-day. We rallied back into the value zone. We've had 1 day down. This is a V1, but it's not a good one. We didn't have much of a washout bar. So I would like to see another day down, and then a higher low V1, V2 would be excellent. Utilities moved up nicely here, starting to come down, but look how many times we get up to that third ATR channel, and that's it, right? So let's just wait for that pullback. And then healthcare, way too high, need a pullback. So honestly, I don't see anything today whatsoever, unless somebody has a good setup on your end. Hey, by the way, everybody, Dirk, if you're listening or going to be watching, he sent me an email saying, hey, I did a back test on gold and it didn't work out very well. What am I doing wrong? So in the email, Dirk said he ran the back test from the 2010 to today, right? So my back test is from 2000 to 2019. And the back test on the gold trade is not as good as buy and hold. But look at the drawdown. Everyone always focuses on what the returns on, but it's very important to keep the drawdown small. The bigger the drawdown, the more likely you're going to get out of your trade, make a rash decision, do something that you're not supposed to do. So if something returned 100% and 100%, but the drawdown was only 10% compared to the other one was 40%, of course I'm going to pick the one that has the lower drawdown. So 2 things, Dirk, you were using 2010 to 2019. I'm using 2000 to 2019, and in your numbers, it didn't take into effect what the maximum drawdown, and the maximum drawdown of using the 520 crossover, not as good as buy and hold, but the drawdown much better. So just quickly wanted to mention that for Dirk. Okay, Mount Doji says, I'm curious about BLDR and AK. All right, let's take a look. Whoa. BLDR. So this is for Mount Doji here. So we came down, we moved sideways, then we broke down. Now here's our 2 sideways. This is a V1. It's not bad. The washout isn't fantastic. I don't know if it's a quarter of an ATR. Let's see, a half is that, a quarter is that. It's close. It's close. I mean, it's above 50 RSI. It's above the moving averages. It's a decent V1. We did reject the 1 ATR channel, the negative 1 ATR channel, which I like. Let's look at the weekly. Weekly's a little high, I would have to say. When Kerry Lavorne taught me this, I said, do you always look at the weekly? He goes, yeah, I look at the weekly and I look for something I hate. And I said, what would you hate? And he goes, well, if it was strongly above the second ATR channel, and we are above the second ATR channel on the weekly. Remember how often things get rejected at the third ATR channel on the weekly. So we're not quite there, but something to take into consideration. But not bad, Mount Doji. I mean, you could certainly do a lot worse. V1, rejection of the 1 ATR channel, sideways movement. So not bad at all. AKCA. Well, Again, though, we're above the 1 ATR channel. We come back down, but we went down and we went down again yesterday. So there is no sideways movement here. See, this is down, this is down. This is more of a V. Down, 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 up. Remember, it's better to come down sideways than the V1. This is a beautiful V2. There's no doubt about it. This day one is a little bit larger than 1 ATR as well. It's not bad. I like it. You know, MACD is positive, which is good, but I don't like the sideways movement. I mean, I don't like that there's not any sideways movement. Let's look at the weekly. Yeah, honestly, I don't like it. On the weekly, we have this V1, negative V1 to the downside. This is a big bar. You know what you know about big bars. If we go down big bar, 50% of this down move is probably going to act as resistance. So I think I like the first one better. The Goldstein read hits deep. Well, that's what it's about, Frank, right? It's about managing risk first. Take care of that and the rest will follow. Kurt says, Intel put 83.13 as of now. Yeah, that's what I figured. Kind of off the top of my head, I figured. So that's a good trade. A man Solo says, looking at X-Ray. X-R-A-Y. So we came down, we made a lower high. When we make a lower high, we need to wash out the previous low, and we did not wash out the low. So here's the high, came into the value zone. Now we attempted to rally up, but we've made a lower high. See how this high is lower than this high? When that happens, we then have to wash out the first low, and we did not do that yet. So in my opinion, I would not be buying this. And I mean, it is a V1, right? But there's all sorts of V1s and V2s, right? You're going to have them all the time, but they have to be in the right formation, in the right context. So me personally, I would not buy that. Murat, hey buddy, good to see you, my friend. Murat says, hi Greg and all. I am just listening while doing other stuff. Well, thank you. Appreciate you coming by, Murat, while you're doing other stuff. That's a compliment. Merry Christmas and happy holidays to you there in Norway, my friend. Murat says, regarding the back test, I think the back test should be run similar to the holding period which you may have in your mind from 2000 to today, 19 years, but you won't be holding it the stock next 19. Yeah, that makes sense. But on the other hand, too, I think the more data for a back test, the more solid it is as well, right? Instead of just a very short amount of back test, anything could happen. But I hear what you're saying. Murat says the back test should be run in similar to window averaging fashion. If you think you'll be holding it max 3 months, you have to do back tests for 3-month window and perhaps take an average of it. That's a good point as well. Murat says, as an expert on signal processing, it just came to my mind while listening to you. Oh, interesting. I'm going to have to process that a little bit after, so I can kind of internalize that. Murat says, I wonder if you or Steve Burns have seen such a window back test before. I don't think I have. I don't know if Steve has. A man Solo says, X-ray on my chart looks like a washout of the low. I think mine must be without dividend adjustment. Yeah, could be. Could be. But here's the low. The low is 56.11 and today's low is 56.19. So, you know, if you go into your trading platform, Mod Solo, you know, I'm not sure on TradingView whether it allows you to do it or not to adjust for dividends, but ideally I would try to adjust for dividends. If you don't have it, you don't have it, and that's fine, and you just stick with what you have, right? It doesn't mean that my charts are right, yours are wrong. It's just, that's just how I have my charts set up. All right, so anything I need to do here, it looks like Amazon is fine. Looks like it's holding above our 250. GE is up, so that looks good. Gold, 3 profit targets. It's fantastic. Silver, 3 profit targets. Fantastic. SPY, we had the nice little overnight SPY trade. We'll be buying that again at the end of the day, and then VIX is down. So yeah, I don't really see anything that I want to take today whatsoever. I'm going to look at Mount Doji's BLDR again. Yeah, I like that one better. And let me see, did I miss anything up here? Oh, John. ARGT. Let's look at these quickly. At least a couple of them. Wow, look at Argentina stuff, man. That's rallying really great. Obviously, I can't buy it up here. It's up at the 6 ATR channel. Wow. So it looks like Argentinian things are doing well. Do you have some of that, John? Oh, I forgot to look. Man Solo and Alan also have Comcast. They bought this higher low V1. This seems like it's working out nicely for them. Nice job, guys. Me personally, if we close below this whole band of moving averages, I would probably lock in profits. But that's just me. Oh, a Man Solo had this one here. He bought this V2 here. It moved up nicely yesterday, but down today. So I would be using the halfway of this washout bar here as my stop. That's just me though, but keep me up to date. The Man Solo, let me know what you're doing with that. So yeah, so Comcast, Allen, and Man Solo are doing well there. This trade not so great for Man Solo, and then this trade really great for Man Solo on Love. With this higher low V1 yesterday, it's up 3.62%, so fantastic. Nice going. Dr. Jorgensen says, good hike, lots of sunshine today in the desert after rain yesterday. Good holidays to all. You too, Bruce. Appreciate it, my friend. Thanks for coming by, and I will talk to you later. All right, we got 1 minute countdown. Then tomorrow, obviously, is Christmas. We won't be having the podcast. Thursday and Friday we'll be back to normal. So we'll have Thursday and Friday trading, and then we'll have Monday trading and Tuesday trading as well, and that will be the end of the year. Can't believe we're going into 2020. So crazy. A whole new decade. You know how each decade changes. Okay, so we've got about 5 seconds here. All right, so let's take a look and see. The only thing we did was we had the new SPY trade today, so and we got filled at 321.23. All right, so that's our only new position. Yep, that's it. but did hit a yearly high again today. Thank you for that, market. Appreciate it. Boy, what a year's difference. Boy, last year, this time of year, people thought the world was ending. I mean, I think it was the worst December since since the Great Depression in the 30s. It was like the worst month ever. Man, it was brutal. It was mind-numbing. And, I did learn one lesson last year in that huge amount of turmoil we had in the market. And, man, I had a great year last year. And then this last quarter came in, and I put a little bit too much faith in the 200-day moving average. And, it's important. There's a lot of support there. But I remember last year, there were so many things down at the 200-day moving average, and the move had been so large. I position size a little high, got to be honest. And I did end up positive last year on the year, which was no small feat. But by positioning size a little bit too much last quarter, putting a little bit too much faith in the 200-day last quarter, it cost me a lot of my profits. So, going into the next year, which was this year, I was like, not going to increase that position size no matter what, and stuck to my rules the entire time this year. So, think about maybe some of the mistakes you've made this year, and think hard about it, and be honest with yourself about it, and make improvements or adjustments to the mistakes you made this year, and don't bring them into next year. So anyway, I'm going to go through, see if anybody has any more comments or questions. Before I do, I just quickly want to put in a quick plug, my quick daily plug, and let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I do have a course, the one-on-one course via Skype. It's 5 sessions. Each session is between 2 and 3 hours, and I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all of my coaches and mentors, plus all the things I've developed over the years. And, if you take the course, I think you'll like it. It's $1,000, but I think it's well worth the money. I think it's an investment in yourself and your trading. I think once you're done with the course, you're going to be a much better trader than you are now. And so anyway, if you're interested in doing this course with me, please let me know. You can reach out to me on email. Email is in the description of this video. You can also reach out to me on Twitter. But before, I work with a new student, I like to have an initial Skype call. And the Skype call is free just to see if we're a good fit to each other. I like to talk to you. I like to learn more about you, your trading and your challenges, what your goals are, and then if you decide that I'm a good fit for you and you're a good fit for me, and then we work together, then I will take what you told me during that Skype call and I will put it into a lesson plan, and keeping your goals in mind, and hopefully have you achieve those goals. So anyway, again, if you'd like to have that free Skype call and, talk about the lessons, what they entail, let me know. But they're pretty intense lessons. I do a lot of teaching. I ask you a lot of questions. I have you teach everything back to me. We do a lot of chart study. I have you break down the charts. Here during this live stream, I'm the one breaking down the charts, but in the lessons, you're the one breaking down the charts. So it's a good exercise. So again, if you're interested, just reach out to me, email, or you can send me a message on Twitter. And then if you like today's podcast, if you found it valuable and you're learning something, I really would appreciate it if you could hit the thumbs up button on your way out. It helps grow the channel and helps promote the channel out to more people. So if you like today's content and you learn something, just do me a favor, hit the thumbs up button. I would appreciate it. Okay. Dr. Long says, dollar, emerging markets, gold, all the same trade. Not good for stocks long run. Yeah, I agree. I've been quite bearish on the market, which goes to show you, right? Doesn't matter what you think. I've been bearish. The market's been going up, but it doesn't stop me from taking long positions, right? Yeah, I agree, Dr. Long. Hey, Christopher Hitchin, good to see you, my friend. Hope you're having a good Christmas Eve tonight in the UK. Thank you so much. Hope you have a good Christmas tomorrow. Christopher says, is market open Boxing Day? Man, I have to admit, I'm not sure. I know it's a holiday in England. Christopher, do you know what day that is? And then Clarence Beeks wants to look at ANSS. Well, Jesse, it's a V1 for sure, but this would be the maximum that I would take this trade, because from the -1 to the +1, 3/4, we're right at about 3/4. But I mean, there's no sideways movement. We were above the 1 ATR channel. We came back into the ATR channel one day and then had the V1. So I wouldn't take this personally. And it's a 6258 RSI. No, I wouldn't take this. I wouldn't take this here. I mean, we've had resistance here and here. We just had one day down here, no sideways movement. I mean, we came down yesterday, so there's only one day of sideways movement. So no, I wouldn't take this. At this point, I would like to see this for a couple days move sideways and then take the V1 or V2. Mount Doji says, I picked up BLDR. All right. All right, so that's Mount Doji. I assume it's somewhere in this range at the close. Mount Doji. All right. So, Jesse, compared to the one that we just looked at, ANSS, so here we came down into the value zone. We're down. Here's a couple days sideways movement. See the difference? Then you have the V1, and it's above the 5 and the 20 and the 10, and it's above 50 RSI. Yeah, it looks good, right? So, of course, the washout or the stop would be halfway of this washout bar right here. If it were me trading, Mount Doji may have other ideas. Thursday. Yeah, the U.S. market is open on Thursday. For sure, Christopher. Pat Connell, hey, good to see you, my friend. Pat says, thanks, Greg. Merry Christmas and happy holidays to all. Thank you so much, Pat. Appreciate that. And same to you. Clarence Beeks says, yes, high on triple screen as well. Did not take. Okay. Do you have any positions at the moment, Jesse? Or Kurt or Anthony? So I'm just going through here to see if I missed anyone's symbols. I'm going to read Frank's poem again. When you take a position, make sure that it agrees with your disposition, because it ain't right if you can't sleep at night. So good, Frank. Dang. All right. Jesse says, riding the roller coaster on CME. Yeah. So I assumed you bought it. I assumed you bought it here, Jess. Closed below halfway. Did test the halfway today, but closed back above, so that's a good sign. Looks like you're getting a dividend soon, so that will be nice. $2.50 dividend? Holy smokes. Oh, I guess for that large of a stock, it's not that big of a deal. All right. So that's Jesse. Mansolo, halfway of the washout bar, good. Kurt's in SLV at the moment. Well, that's the one to be in, isn't it, Kurt? Yeah. Jesse says, hit a profit target next day from taking, now dancing around, stop loss took on the 19th. Yeah, I assume so. And you hit one profit target there. But it is holding, you know, it is holding that halfway. But if it closes below that halfway, you got to get out. So, well, Christmas Eve. Boy, oh boy. Last Christmas Eve of the decade. I wonder what 2020 is going to bring, right? Like each decade, you know, has its own feel to it. Different things happen. So it should be interesting. 2020. Boy, that seems so long away when I was a kid. 2020, and here we are. But, you know, I just might mention again that do some thinking, go into a quiet room, think about your trading in 2019, what you did right, what you did wrong, be honest with yourself, be open, and, you know, try to make some adjustments going forward for this new year and this new decade to maybe tighten things up a little bit, make some positive adjustments to your trading. And remember, guys, trading is a long-term endeavor. Everyone understands what we mean when we talk about long-term investing, but no one really has that thought when it comes to trading, and it's the same thing. Each trade is just one of the next 1,000 trades. Any one trade should not make you too excited or too depressed. Make sure you position size correctly, take the long view of trading, adhere to your rules that you've in your plan, and you know, do it for 1 week. And if you can do it for 1 week, then do it for another week. And then it will turn into months and months, and maybe you will have traded perfectly for a year or followed your plan perfectly for a year. But, you know, I can't overemphasize this. You have to follow that dang plan. Regardless of where you're winning or losing, you're going to lose. There's going to be drawdowns, guaranteed 100%. And the difference between a good trader and a great trader is the great trader in those downturns realizes it's just part of trading and won't start buying too large positions because they want to hurry and make that money back. Just flow with it. Just keep steady as she goes, right? So that's what's important, everybody. That's the key to trading. And that's why so many traders lose money, because they make money when, you know, things have been going great, right? Market's been going up and making money. That doesn't show you what you're made of. What shows you what you're made of is when the market starts going down, you start losing money, you start having those negative emotions coming out, and that's when people make the worst decisions. They're like, dang it, I lost 2 weeks of money in 3 days. Well, you know, I'm going to double or triple or quadruple up now and make that back quick. Don't try to make it back quick. I guarantee you, it's one of the ways to lose money faster. I promise you. Kurt says, yes, doing very well. Hey, man, Solo, did you look at XLRE today? I did. So we bounced off the 200. We closed below the 1 ATR channel. We went back into the value zone. I like to see 2 days of down. Well, I guess this technically was down, right? I mean, it closed below, then another day down. But it is a V1, a man solo, but it's not a good V1. See how this barely washed out the low? The more it washes out the low, the better, because that way it shows that it put its toe in the water way down, couldn't find any sellers even way down there, right? And that's why V1s, V2s are good entries, because it shows you that it just tried to go lower and there were no more sellers down there and reverse back up. Does that mean it can't go down? No, it doesn't, but it's good information. It's relevant information in a very short time frame that just already showed you. If the market already tried to go down and went and reversed back up, then it's good to know that it didn't want to go down there, right? It gives you an edge. But it is a V1, but I don't consider this a good V1 because it didn't wash out the low enough. Frank says, I don't use much social media, so I'm honored if you want to use what I write. You guys are the best. No, thanks, Frank. You're the best. Now, Frank, I think you're a musician, right? And you were a writer for, was it Billboard magazine? Which is pretty cool. When I saw that, and I might be wrong on Billboard magazine, but I know you were a writer. And so when I see you writing, I'm like, oh yeah, that makes sense because he's an excellent writer. Jesse says, on ANSS, was looking at the sideways movement from previous 4 days, which we had barely closed out of value, which shipwrecked the rule. Rest easy, I haven't forgotten everything yet. I hope not. I hope not. Jess, if you ever do forget anything, just contact me, right? So, was looking at the sideways movement from the previous 4 days. Yes, it is good that we went sideways. We had the barely close out of the value, which was here, which shipwrecked the rules. That's right. It did. And so we were above here. Now we need to go down. Here's day one. Here's day one sideways, because this went down, this closed above. Here's day one sideways. You need a couple more sideways, then a V1, V2. Man Solo, also, would you look at buying Netflix if it tags the 200-day at such high levels? No, I wouldn't. Because remember now, I don't want to buy anything over the 1 ATR channel unless it's a crossover. And if it's a crossover, the absolute maximum I'm going to buy is the second ATR channel. Only on a crossover. Yeah, that's not a good example. But no, on a V1 or a V2 or a bounce off the 200, something like that, I'm not going to buy it up here at the second ATR channel. I'm only going to buy it in value. So just to be clear, my V1s, V2 entries, I'm not going to buy over the 1 ATR channel at all. As a matter of fact, I don't even want to buy it more than 3/4 from here to here. That'd be my maximum. Now, on a crossover, I give it a little bit of a pass. I give it a little bit more room, but the maximum I will buy on a crossover is the second ATR channel. Sorry. Netflix. But no, I would not buy it. Now, it doesn't mean that the 200-day is not going to hold there and go higher, but look how high we are. We're above the third ATR channel. Remember, sometimes it can go up to the 6 ATR channel, but 90% of the time, this is the max. So, we have to play the percentages around solo, and sometimes they get away from us, but that's okay. But, I would not buy a bounce off the 200 at this level, no. Jesse says, thanks for everything, Greg, and I hope you have a great Christmas. I'll raise a glass of eggnog to you all this evening. Apparently it's frowned upon at work. Hey, thanks, buddy. I appreciate that. Thank you very much, and thanks for raising the glass. And I hope you have a good Thanksgiving, Jess. I mean, a good Thanksgiving, a good Christmas Eve, and enjoy time with your family, and have a great Thanksgiving or Christmas tomorrow. But thanks for all you do, bud, with your work and everything. Frank says, my brain tends to back test, which has made me a bit skittish this month. My brain tends to back test, which has made me a bit skittish this month. Are you back testing to last December? Is that what you mean, Frank? Frank says, I was a business writer for the music industry. Ah, interesting. Interesting. Alrighty. Well, I have my IT guy coming over here in about a half an hour to help me out. So I'm going to say goodbye to everybody. And remember, everybody, Merry Christmas. Hope you have a great day tomorrow. Happy holidays. Happy Hanukkah. Whatever you celebrate, have a great day. Have a great evening tonight. Have a great day tomorrow. See you back here on Thursday, hopefully. Regular time, regular hours. So Frank says, yeah, last December. Yep, me too, buddy. I'll tell you what. That was horrible. But Frank, thank you for coming. It's nice seeing you. Thanks for everything you do and your great sayings, your great poems. Aman Solo, nice speaking with you last night. Look forward to working with you, and have a great night tonight, great day tomorrow. Jess, again, have a great Christmas Eve. Have a great day tomorrow. And thanks. And it's been great working with you. And let me know if there's anything I can help you with, all right? And Kurt, good to see you, buddy. Glad you're in silver. Hope you have a good Christmas Eve. Great Christmas tomorrow. Pat O'Connell, thank you for coming. Merry Christmas. Dr. Long, good seeing you. Thanks for coming to the early show. And Merry Christmas. Christopher Hitchin, have a great night in the UK. Mount Doji, you have a good Christmas Eve tonight. Have a good day tomorrow. Tomorrow the Lakers and the Clippers are playing, so I'm looking forward to watching that. That should be good, right? Let's take a look here. Dr. Jorgensen, good seeing you, my friend. I'll speak to you later tonight. Murat, thank you. I'm going to read through this and try to internalize this a little bit more when I can use more of my brain to try to process that. But I'll let you know what I think. But have a great night tonight, and hope you're enjoying time with your family and your dog. Steve Burns, thank you, buddy, for coming. Appreciate it. Glad you had a great day today. On all your positions. So anyway, thanks for everything you do, and hope you and Holly and the dog have a great night tonight. Good day tomorrow, and thanks again. Shane, thank you for coming by today. It's good seeing you for your first time. Hope you come back. Let me know if there's anything I can do. Mr. Anthony Rizzo, good seeing you, my friend. Thank you for coming to the early show. Hope you and your family have a great Christmas, and a great Christmas Eve, great Christmas tomorrow. And John, if you had any of those Argentine stocks, I hope you did, because those look like they've been roaring. So good seeing you, and Merry Christmas, bud. Let's see here. And Alan Bailey, I think, well, just to be safe. Alan, thanks for coming. Merry Christmas. Have a good Christmas Eve. Have a great day tomorrow. JT, good seeing you, my friend, and Merry Christmas to you as well. William, good seeing you. Hope you have a good Christmas in Hawaii tonight, and give Coop a pat on the head for me. And Marco, good to see you in Slovenia. Hope you're having a good night over there, having a good time. And if there's anything I can help you with, buddy, you just let me know, okay? So everyone, thank you. Appreciate you being here. Hope you're learning something. And I guess that's it for today. So have fun tonight. Be careful, and make sure two things, right? One, you go out and do something nice for somebody tonight, extra special tonight, because it's Christmas Eve. go out and do something nice. Just a wave or a smile or say hello or hold the door open. Just something that really might make a difference in that person's day that you're not even aware of. So make sure we do that every day. And then on the way out, if you haven't hit the thumbs up button, I would, for a Christmas present, for me, could you? That'd be great. So, all right. So we're not here tomorrow with Christmas. We'll be back on Thursday. So take care, everyone. Appreciate you coming. Have a great day now. Talk to you soon. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.